Ever glanced at a price chart and thought, hey, that kinda looks like a coffee cup? Sounds funny, right? But in trading, this cup and handle pattern is a real deal. One of the most reliable bullish setups you'll come across. The cool part is, if you spot it early enough, you can get in before the big move kicks off and ride that breakout to some serious profits. So today, I'm going to walk you through everything you need to know about this pattern in 3 easy sections. From what it looks like, how to spot it like a pro, and most importantly, how to trade it with confidence. Stick around because missing this setup could mean missing out on a juicy trade. Alright, let's start with what the cup and handle actually is. The pattern got its name because it literally looks like a cup with a handle attached to the right side. Almost like you could pick it up and take a sip. The first part, the cup, forms when price dips down smoothly on the left side, then rounds out into a nice U-shaped bottom instead of a sharp V. This smooth rounding is important. It shows a gradual shift in market sentiment, like where selling pressure starts to fade and buyers slowly step in. Then comes the handle. A smaller, short pullback or sideways move on the right, kind of like a little breather before the next leg up. This handle is crucial because it often shakes out weak hands and sets the stage for a breakout. When the price finally pushes above the handle's resistance, it usually signals that buyers are back in control and the trend is ready to resume higher. This pattern is especially popular because it blends both patience and timing, showing you when a pause could mean a big move is coming next. Now, spotting a cup and handle isn't just about seeing something that looks vaguely like a coffee cup. You want to be precise if you want to trade it successfully. First off, check the shape of the cup itself. It should be a smooth, rounded bottom, kind of like a bowl. Avoid anything that's too sharp or forms a V shape because that usually means the price moved too quickly without enough consolidation, making it less trustworthy. Next, volume is your secret weapon here. During the cup formation, volume typically drops as traders cool off and wait, which makes sense since it's a consolidation phase. Then, as price moves up toward the handle and during the breakout, volume should pick up. That's your confirmation that buyers are coming back strong. Finally, look closely at the handle. It's usually a short pullback or sideways channel that slopes down slightly, almost like a flag or pennant pattern. This short dip is healthy and normal. It's like the market's last pause before it charges forward. If the handle is too long or too deep, that can be a warning sign the pattern is losing steam. So keep your eyes peeled for these 3 clues. Smooth cup shape, volume fading, and then rising, and a clean, shallow handle pullback. Nail these, and you'll be spotting the pattern like a pro. Alright, here's the part you've been waiting for. How to actually trade the cup and handle pattern. The real magic happens at the breakout, which is when price smashes above the handle's resistance level with good momentum. That's your green light to enter the trade. Ideally, you want to place your buy order just above that breakout point to avoid jumping the gun. Risk management is key here, so your stop loss should be just below the lowest point of the handle. That way, if the breakout turns out to be fake, you limit your losses. Now, for the profit target, a simple but effective method is to measure the depth of the cup, the vertical distance from the bottom of the cup up to the resistance level, and then project that same distance upward from the breakout point. This gives you a realistic price target based on the size of the pattern itself. Of course, keep an eye on overall market conditions and adjust your trade if things change. But this setup often leads to strong, predictable moves. It's clean, it's straightforward, and with a bit of practice, it can become a powerful part of your trading toolkit. So the takeaway here is this. Don't underestimate the cup and handle pattern. If you miss it, you might just miss some nice profits brewing right under your nose. This pattern combines patience, timing, and clear rules, making it a favorite for traders who want a solid edge. If you found this breakdown useful and want more fast, no-fluff trading tips that cut straight to the chase, make sure to hit that like button, subscribe to the channel, and drop your favorite trading pattern or question in the comments. I love hearing from you guys and sharing more patterns to help you trade smarter. Thanks for watching, and I'll catch you in the next video.